Hey everyone, welcome back to Corporate Decoder, where we decode the fine print so you don't have to. And let's just say this filing is going to have us digging into some interesting money moves. Today we're diving into Offerpad Solutions Inc.'s latest filing. Now Offerpad is in the business of buying and selling homes, kind of like a digital real estate agent, but they actually buy the houses themselves. Think of them as investors who want to make it easier for people to sell their homes quickly without the usual real estate drama. This particular filing is called an 8K. It's like a special alert for investors, letting them know about big important events that happen outside of the regular financial reports. So Offerpad Solutions Inc. as of July 24, 2025 has been busy. Their main stock is Class A common stock, and you can find it trading under the ticker OPAD on the New York Stock Exchange. The big news here is that Offerpad has entered into what's called a securities purchase agreement. Basically, they've agreed to sell more of their company's stock and some special options to buy stock called warrants to investors. They are selling over 2.8 million shares of their common stock. This is like giving away more slices of the company pie to new owners. On top of that, they are also selling warrants, which are like options to buy more stock later on. They are selling warrants that could allow investors to buy another 1.4 million shares. All these sales are bringing in about $6 million for the company. Think of it as them raising capital, getting cash injections to fund their operations or future plans. The stock sale itself is happening through something called a registered direct offering. This means they already had permission to sell stock and are now doing it. It's like having a pre-approved loan. The warrants, though, those are being sold privately. This means they aren't being registered with the SEC in the same way, and are usually for a select group of investors who meet certain criteria. Now, about these warrants, they have a price of $2.30 for each share of stock you can buy with them. They become available to be used after January 2026, and they expire in January 2030. These warrants also have some smart features. If the company splits its stock or issues more shares through dividends, the price you pay for the stock with the warrant can adjust. This is pretty normal to keep things fair. One of the more interesting parts of these warrants is what happens if Offerpad gets bought out or goes through a major change. The people holding these warrants have a right to get the same kind of deal as other shareholders. So if the company is sold for cash, these warrant holders can also get cash for their warrants. Offerpad has also promised to file another registration soon to make sure investors can eventually sell the stock they get from exercising these warrants freely. They want to make it as easy as possible for these new investors to trade their shares. And here's a key restriction. For 90 days after this deal closes, Offerpad is limiting its ability to issue more stock or do certain types of financing. This is likely to prevent diluting the value of the shares they just sold and to give those new shares a better chance in the market without immediate competition from newly issued stock. An important detail for warrant holders is that if they can't sell the underlying shares easily, they might be able to use what's called cashless exercise. This means they can use their warrants to get stock without actually paying cash, only if the stock isn't registered for sale. There's also a limit on how much stock one person can own through these warrants. Generally, they can't own more than 499% of the company's stock when they exercise their warrants. This is a common way to prevent any single investor through these warrants from gaining too much control too quickly. To help make this whole deal happen, Offerpad hired a placement agent, AGP Alliance Global Partners. Think of them as the brokers who found the buyers and managed the sale. Offerpad will pay this agent a commission, which is 7% of the $6 million raised. That's a pretty substantial fee, around $42,000. They also agreed to cover the agent's legal expenses up to $5,000, which is also standard practice. There's also a kicker for the placement agent. If they introduce investors to Offerpad, and those investors end up doing another deal with Offerpad within 9 months of the agreement ending, the agent gets a piece of that too. This is their way of incentivizing the agent to bring in serious long-term investors. Both the agreement to sell the stock and the agreement with the agent have standard clauses about what each party promises is true, what they'll do, and how they'll protect each other legally. These are the normal legal safety nets in these kinds of deals. And to make sure everything is legal, Latham & Watkins LLP, the law firm, has provided an opinion confirming that the sale of these shares is valid. This is crucial for investor confidence. Now let's touch on the unregistered sales part, which mostly refers to those warrants we talked about. The reason the warrants aren't registered is because they are sold under an exemption for private placements, which assumes sophisticated investors are involved. They've essentially stated that the buyers are accredited investors, meaning they meet certain income or net worth requirements. This is a key piece of information confirming that the buyers of these warrants meet the government's definition of having enough money to be considered savvy investors. Finally, we get to the exhibits, which are like the backup documents for everything discussed. This is the contract with the placement agent. This is the actual template of the warrant document. And this is the legal stamp of approval from the lawyers. And of course, the filing needs to be signed off on by company executives. Here we see Peter Nag, the Chief Financial Officer, has signed off on this report dated July 25, 2025. This confirms the company is officially submitting these details. So let's put this all together. Offerpad Solutions is raising $6 million by selling new stock and warrants. This is a common way for companies to get cash without taking on debt. They're selling these shares and warrants to accredited investors, which is a good sign that these investors are likely experienced in these types of transactions. The company is also putting some restrictions on itself for a short period to protect the value of this new offering. Now, from a purely financial perspective, raising $6 million is a positive step for a company in a capital-intensive business like real estate. But it's important to remember that this is just one transaction. We need to see how this money is used, how it impacts their overall financial health, and if it truly helps them grow or just keeps the lights on. The fact that they are using a placement agent earning a 7% commission and reimbursing expenses is pretty standard, but that 7% fee is a significant cost of this capital raise. The terms of the warrants are also important, especially the potential conversion into cash if the company is acquired. Ultimately, Offerpad is making moves to bring in cash. The question for investors always is this cash going to be used wisely to generate more value, or is it just a stopgap? We need to watch their future performance to see if this capital infusion translates into real growth and profitability. Alright, that's our breakdown of Offerpad's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord link in the description for more community discussions. Thanks for watching. See you next time.